Hi, I'm Danny Price with Roaming Investors, and I'm going to talk to you today about tax sales in the state of Georgia. First of all, let me tell you, we don't do workshops. We don't sell courses or classes or books or mentorships or field trips. I'm not an academy, I'm not a university, and I don't have a boot camp. We are active real estate investors that purchase at auctions in multiple states. And if you would like more information about what we do and possibly partnering with us, click on the link below in the description. And now, Georgia tax sales. First of all, I'm going to give you the facts and then references to the code about tax sales in Georgia because there's a lot of misinformation out there, and I want to set the record straight. First of all, Georgia is a tax deed state. If you are bidding at public outcry in the state of Georgia at a tax sale, you are bidding on tax deeds, not tax liens. Auctions are held at the courthouse steps in person, and if an auction is going to be held, it is going to be scheduled on the first Tuesday of the month in which it will be held. At Georgia tax sales, the highest bid wins. That means anything over the opening bid that the county has is going to be the winning bid if there's no other high bidders. In Georgia, when a parcel sells at the tax sale, the previous owner has a redemption period in which they can get the property back. Now, you may hear in Georgia it's 1 year, and that's not entirely true. It's at least 1 year. You see, in Georgia, when a property is sold, the previous owner, like I said, has a redemption period. That redemption period is at least 1 year, but extends up to 4 years if you don't do anything. So let's talk about the redemption. If a previous owner wants to redeem their property at any time within the first year after the sale, they must pay whatever the high bid was plus 20%. That's why there's so much competition among investors in Georgia. Oftentimes, they don't want the house, they want the 20%. So they will run the bid up, hoping that the previous homeowner will redeem, and they'll make 20% on their money. So let me say that again. If the previous homeowner wants to redeem within the first year, whatever the high bid was, the winning bid, they must pay that plus 20%. If it goes into the second year, add another 10%. So that second year, we're talking about 30% redemption rate. It's not an interest rate, it's considered a penalty. So as a tax sale investor in Georgia, when you purchase a property at tax sale, you're not allowed to trespass on that property until you do something called foreclose on the right of redemption. That's when you get full possession and ownership of the property. Until you bar redemption, the previous owner can redeem, like I said, up to 4 years. You can't file to foreclose on their redemption rights until at least 1 year has passed. The property can be redeemed by anyone with a legal interest in the property. For example, a mortgage company, a lien holder of any type, even those who have mechanics liens against the property. So just to quickly recap, Georgia is a tax deed state. If you are purchasing property at a tax sale in Georgia, you must wait at least 1 year. Then you have to file a lawsuit to foreclose on the previous owner's right to redeem. Once that lawsuit is successful and their right to redeem has been foreclosed, you have full ownership of the property. You don't have what's called marketable title, but you have full ownership. So that's the code and the law as it pertains to tax sales in Georgia. Now let me give you some tips. First of all, when you're purchasing any property, you must verify the property is actually what you think it is. You see, when you're purchasing property at a tax sale or even a foreclosure sale, oftentimes you're going to be tempted to believe the address. Don't believe the address. The address is an alias. You must go by the parcel number. The property is always going to be sold as a parcel number or legal description. The address is always an alias, like a nickname. Can't trust it. There's been stories in the media about people purchasing property that was too narrow to do anything with or 20 feet wide. There was no secret about that. It was right there in the legal description. All they had to do was verify the property lines. That's my next tip, is when you're purchasing property, verify the property lines. You need to go out to the property and look at it in person. Don't buy property online that you've never seen and stood in front of. You need to verify you have access to the property. You need to verify you can actually do something with the property. If it's land, can you build on it? Can you see the property lines? You need to see the actual outline of the property, and you need to verify that it's usable and you can use it for what you want to do. In other words, you're making sure it has the value that you think it has. Next, if you do end up purchasing property at a Georgia tax sale, you need to reach out to the previous owner. Our strategy is find the previous owner, see if they will sign a quitclaim to you or a regular deed. You see, if they do that, then this whole process is over. They have deeded the property to you and it's now legally yours. Now, why would an owner do that? We've had many times where we have found owners that simply did not want that property anymore. There was some type of emotional baggage connected to it, and they just simply didn't want it. So we met them, they were agreed to sign a deed over to us, and we paid them for their time. So everybody was happy, and we had marketable title. So always try to find the owner. If they're going to redeem, try to get them to redeem as soon as possible. There's no need to wait for another 12 to 14 months. It'll cost everybody time and money. So my advice, reach out, try to find the owner, have a conversation. Are you going to redeem? At that point, you're already going to make 20% on your money if they do redeem. Might as well get it over with. And like I said before, if they're going to redeem within the first year, you're going to make 20%. If they wait until the second year, you're going to make 30%. If you can't find them, though, you can foreclose on their right of redemption after the first year. That's usually going to cost you around $2,500 in my experience, because when you hire an attorney to foreclose on the right of redemption of the previous owner after the first year has passed, go ahead and have them do quiet title at the same time. Around $2,500, once it's done, you have marketable title. You have no fear of the previous owner coming back and redeeming the property. You can do what you want with the property at that point. Now, let's say you purchase some property at a tax sale auction and decide later you don't want it. What can you do with it? Well, you can sell your interest in that property. You have a legal interest in that property after you purchase it at tax sale. That interest can always be sold. Think of it just like mineral rights. You may not know that you can actually sell the mineral rights to a property. You could have your house on it and sell the right for a mining company to go under and look for gas or something like that. So your interest in that property is valuable. It has a value to somebody. Try to sell it if you don't want to keep it, and wait for your year before you can file your lawsuit. So that's it for now for this video. I'm going to add more videos soon. Feel free to drop me a comment below to ask me any questions. Now, unfortunately, as I said before, we can't work with you on a one-on-one basis, any type of mentorship or partnership. There's a link below if you're interested in being a passive investor in our fund, and if you qualify, you can get more information below. But for now, if you have comments, you have questions, drop me a comment below and I'll answer it here on YouTube, and look for more videos soon. Thanks for watching.